Hello, all. Welcome to Chapter 2 of the tax textbook. This chapter focuses on procedures and administration. So it's going to focus mainly on the rules around filing a tax return. When should you do it? When do taxes have to be paid? And if installments are required, how do we calculate those? So just to jump right in, we'll get started discussing just, what the CRA is for and when should we be filing tax returns. So, sorry. So the CRA mandate is to administer tax benefits and related programs, ensure compliance on behalf of governments across Canada. So the CRA itself doesn't actually control tax law or rules. That falls into the Department of Finance. The CRA just administers the taxes. So if you are filing a tax return and the CRA tries to audit you or is interpreting a rule differently than how you would, they're not out to get you. They're just trying to fulfill their responsibility of administering the tax law. They don't pick the rules. It's simply their job to make sure the rules are being applied. So the CRA is responsible for administration of the Tax Act and legislation related to the CPP and EI. So the Tax Act's written for them, and the CRA has to carry them out. The Department of Finance writes the legislation and develops appropriate tax policies. So if the CRA loses in court, um, that based on a tax law interpretation, the CRA can't do anything about it. They have to abide by the court's decision. But the Department of Finance is trying to make sure that these tax rules are sourcing enough tax revenue in order to meet the needs of the federal budget. So if the CRA keeps losing out on tax revenue because of interpretations of a specific rule, the Department of Finance might go and rewrite certain legislation. And so that rule will come out and then it will be applied into the future. But it's not the CRA trying to catch people. It's not the CRA trying to fix certain items or trying to, respond negatively to a court decision. The Department of Finance's responsibility is to make sure that tax legislation's doing what it needs to do. And so tax legislation will get updated periodically, but it's not up to the CRA. They are simply administering it. I know I've emphasized that a few times, but you have to be clear. The CRA is just assessing your tax return based on their interpretation of tax law. Now, when should you file a tax return? Right off the get-go, anyone who owes income tax has to file a return. And in fact, many of the penalties and interest that we discuss are based on the tax balance, the amount that you owe. So if you don't owe taxes, you might not need to file a return. I don't owe anything. This is actually the main reason why children often don't file tax returns. It's not, oh, that if you're, it doesn't mean that if you're younger than 18, you don't file a tax return, and then over 18, you start. Children customarily don't earn income. And since they don't earn income, they don't have taxes payable, so they don't have to file a return. However, if you have a child who gets into acting, maybe they're in a commercial and now they're making some money, you might have to file a tax return because they now owe taxes. So the main determination of whether or not you should file a tax return is, do you owe taxes? Even if you don't owe taxes, there's also a situation where you might want to file anyway, and that's to claim a refund. So if you owe the government money, you have to file your tax return. But if the government owes you money, they're not going to pay it until you file your tax return to prove to them, yes, you do owe me $1,500. So if you think you might be getting a refund, you'll likely want to file a tax return. Now, let's say I have several years where I don't have tax payable, so I'm like, well, I'm just not going to file my taxes. The CRA may demand that you file. The CRA doesn't know your situation and doesn't know that, oh, clearly you're not going to owe taxes. They just know we haven't gotten a tax return from you for a number of years, so they may demand that you file a tax return to help support your position that, well, I just don't owe. Reporting income for RSP contribution. So I don't owe taxes, but in order to garner space in my savings account, my RSP, you have to report earned income. And so to report that income, you need to file a return. If you've realized a taxable capital gain or disposed of capital property, if you want to split pension income, so I don't have a tax payable, but if I split my pension income, I might increase a refund. You need to file tax returns. Pension splitting is administered through tax return filings. And CPP or EI amounts payable and also eligible for benefits. On the tax return, we calculate net income, which is what we did in chapter one. That number, that net income amount, is often used as a benchmark to determine if individuals qualify or are eligible for certain government benefits and programs. So if you are a low income individual, you know I'm not going to owe taxes, I don't make enough money. You might still want to calculate that net income and have the government recognize it on an assessment in order to qualify for benefits. The CRA does have a series of ways they try to make it easier for taxpayers to pay their taxes or file their taxes. They have Simple File. This allows eligible Canadians to file their income tax returns with a phone call, but it's really reserved for low income or fixed income individuals. To file your return with a phone call, you basically just have, say, a T4, maybe a couple credits. So you just give them a call. They will already have your T4 on file, and you're really just emphasizing that there's not really any major changes and that they can just assess based on that information. They'll calculate your net income for you, and you'll just move on. So the Simple File is a very easy way to file your tax return, especially over the phone, but it's for low or fixed income individuals, mostly to calculate their net income so they can continue to receive their benefits. But also, low and fixed income individuals often have very simple returns, the kind of returns that can be done over the phone. Someone who owns a business can't sit on the phone and say, okay, my rent was X, my insurance was another number, my, office utilities. It's too many numbers. Someone's not just going to sit on the phone and write those numbers down. But if you have a simple return that's just, I have a T4, just file it with that as my income, and it might be very easy to do. You can file a paper form or use an electronic method. They are really pushing in this day and age to have more and more electronic filings. Their assessment program is very fast with electronic filings because it just sort of compares income reported to the T4s and such they have on file. And so they can get an electronic sort of, I wouldn't call it a pre-assessment, but an electronic assessment out to you very quickly. Whereas if you paper file, someone has to go line by line on that physically. So NetFile allows individuals to file their own personal tax return directly to the CRA online through the use of a CRA tax certified program. So NetFile is a way for you to file your own tax returns. When you use programs like TurboTax and such, when you do your tax return, the file they save for you is customarily a NetFile program, a NetFile save file. E-file is for tax preparation services. I do have an e-file number. So when I'm using Profile to do up a tax return, when that tax return is finished, it's a matter of pressing a couple of buttons and that tax return gets filed with the CRA. So e-file also very easy, but it's meant for large scale tax returns like tax preparers. NetFile is on the individual basis. So key question. When do I have to file my tax return? So the usual date is April 30th. So January to April, we call tax season because April 30th is when tax returns are generally due. Now, if you have a business, they give you a bit more time, June 15th. It's recognized that running a business might take more time to compile your financial information. So they're willing to give a bit more time to sole proprietors, to business owners who are filing a business statement on their tax return. So June 15th of the following year. We specify following year because my 2025 income needs to wait until December 2025 for me to know what's there. So 2025 income, the tax return's due in 2026, the next year. So this can get a bit confusing when you're trying to figure out, oh, this is income, when is the return due? The return is always due the next year. I will talk about death in just a moment. The balance due date, even though businesses have until June 15th to file their tax return, April 30th is always when the taxes are meant to be paid. So what business owners do is they do get an idea of what their income is in order to pay the balance. So if they think, oh, I'm going to owe $25,000, they'll figure out that number, make their payment, and then they'll sort of sort out their receipts and revenue items to do the final return in June. The reason they will want to make their payment April 30th is because April 30th is the payment due date. And if you don't pay that by that date, interest starts applying May 1st. So you need to get your balance paid, even though the return might not be due until June 15th. Now, for everyone who doesn't own a business, it's the same day. You return your you file your return, you pay your balance. If someone passes away by the date of death, they get at least 6 months to file their return. So if they pass away before October, the reason they choose October is because after October is 6 months to April. So if you pass away before October, you're going to be using that usual April 30th deadline. But if you pass away after October, say you pass away in January, well, April 30th is only 3 months away. So you'll get an additional 3 months to the end of July to actually file the return. Now, you won't be filing the return. You've passed away, but your executor or a lawyer or a representative of your estate will file the tax return all on your behalf. So 6 months after date of death, they provide more time to allow an estate to gather the documents, lawyers to do probate, et cetera, so that we know what the numbers are. So you get a bit more time after the date of death. Everyone else has to follow that April 30th or June 15th. People who have passed away get at least 6 months. So if I passed away in June, let's say June 30th, now 6 months from that is December. So June 30th, 2025, 6 months later is December, I'll get until April. So I get at least that 6 months, but the next filing due date is April 30th. So I'll have until 2026 to file it. So this 6 months only applies if it pushes the already standard date. Individuals who carry on as a sole proprietor or member of a partnership may need more time. Yeah, that's just saying why they might get more time over April 30th. So going to number one, let me just close that other one. Brandon Kotarski's 2025 net income includes income from a business he carries on as a sole proprietor. When is his 2025 income tax return due? By what date must his 2025 income tax liability be paid? Meaning, when are the taxes to be paid? When is the payment date? In order to avoid being charged interest on amounts due. When is his spouse's income tax return required to be filed? Assume that Brandon's spouse will not owe any income tax for 2025, but continues to receive the Canada Child Benefit and the GST HST credit. So Brandon's spouse doesn't earn any income, but needs to file a tax return so they can continue to get the credit. So we're not too concerned about their payment date because we know they're not going to owe anything. But Brandon likely is going to owe. Now, Brandon owns a sole proprietor. He owns a business. So because he's a business owner, his deadline, his filing date is going to be June 15th. So his 2025 income tax return is due June 15th, 2026. By what date must the 2025 income tax liability be paid? Even though his return is due June 15th, 2026, the payment must be made by April 30th, 2026. So he still needs to make his payment, but his return is not due yet. The spouse, because her spouses often file returns together. So if your spouse owns a business and is filing June 15th, you also get that extension so that you can file returns together if you choose to. So Brandon's spouse although they don't have income, so we don't need to worry about the April 30th payment deadline, will still get until June 15th. So if we just look at the solutions, so the filing deadline, if you're carrying on a business, June 15th, no business April 30th. If you have a payment deadline, it's April 30th in both cases. So the 2025 net income includes business income. So the tax return date is June 15th, 2026. Payment due date, April 30th, 2026. So both are required to pay any owing balances by April 30th, but both of their filing due dates are June 15th. I think there might be another 2-2. Deceased taxpayer filing due date. So Sally Chung dies on February 15th, 2026. Sally's only income for 2025 and 2026 was from investments. Her cohabitating spouse carried on a business in both 2025 and 2026. Her legal representative must file her both years' tax returns by what date? Since Sally's spouse carried on a business, her usual deadline is June 15th. But since she passed away February 15th, she's going to get at least 6 months. Now, February 15th is the second month, plus 6 is 8. So August 15th is when Sally Chung's deceased tax return is going to be due. Now, she was alive for a month and a half in 2026. So during that time, she garnered 2026 income. So she'll also have to file a return, or her estate will, in 2027, the next year. To account for that small portion of 2026 that she was alive, she will have a 2027 filing due date. Now, since 2027 is after the 6-month period, which ended August 15th, the following June 15th will be her usual filing due date that her legal representative will have to file the 2026 tax return. Hopefully that was clear enough. So we have the rules around filing deadlines and cohabitating partners. So the 2025 tax return will be due August 15th, 6 months after the date of death. But the filing deadline for the 2026 tax return will be on the usual June 15th deadline. Okay. I'm going to stop this video here since we've talked about who would file or when do you file if you owe taxes, you would want to file if you're getting a refund, and when those filings and payments are due. When we come back, we'll discuss some tax withholdings and get into the preliminary discussion on installments and how to calculate that. I'll thank you for your time. I'll see you in the next video.